here's what I think is very clear, is that hopefully we saw a January low put into place today. And I'm not talking about all the tech stocks. Obviously, some of them are more beat up than others. But if we're looking at the Mag 7 in particular, if indeed we saw a low today, we could get a bounce, but it could be more of a relief bounce because we're heading into PPI, CPI. As your report you just had on, we still have very high yields. We have a strong dollar, although it's coming off a little bit now. We've got earnings season starting, and on top of that, we have an inauguration. So what we like to look at right now, and I think people just to be a tad more patient, is a reset of the January calendar range. It's every 6 months, but particularly when we're changing administrations, is extremely powerful. And right now, that resets, believe it or not, Friday. Okay, ahead of a 3-day weekend inauguration, so maybe you have to wait till Tuesday. But I think it'll be so obvious because if we can break through those January highs that we've seen, obviously the growth stocks, even though they're further from their highs than, let's say, NASDAQ, the index itself, they're still way closer to those highs than some of these other beat-up stocks that are just trying to base out in the value play that so many people are looking at. So watch that range. That's going to be super important, and it converges with all these headlines.
45 seconds, Mish. I just want to quickly, while you've got your tech analyst hat on, the semiconductor software spread. How have you been watching that?
Well, I'm really watching the semiconductors. First of all, they were the first to actually peak out, which is so interesting because after 2 years of dominating, they peaked out first. Now what happened was that they have not, so let's get technical again, right? So the semiconductors SMH 50-week moving average, 237 to 240 SMH. That breaks down. I don't care what the narrative is. That's going to be more trouble for that sector.